All right, great. Welcome everyone. Thanks for joining us here at Real Launch. My name is Troy Muljat, and I am the founder of Real Launch and the IRR Calculator. And today we're going through a presentation on internal rate of return and our IRR calculator. And I just wanted to thank you for joining us or watching this webinar. A little bit about myself. I am a CCIM and a certified property manager, CPM. Been featured in a variety of different articles and media through the local state of Washington associations and also national here. And I've been featured and quoted in the Wall Street Journal as well. And just love real estate and very involved in real estate in the community. These are a little bit about myself again, as I've been a broker for 25 years. I'm also a certified commercial real estate appraiser, and I own a large property management company here in the north of Seattle, up by the border by British Columbia. I own and have invested and built multiple investment properties, and I'm just passionate about helping clients buy and sell commercial real estate. And these are a few of my projects that I have built over the years, just to kind of give you an idea of the scope and magnitude of the projects that we're doing, mainly retail, office projects, and we've done some multifamily as well. Last month we did a webinar on what agents need to know about a commercial real estate transaction, more of a basic one, and these are the 4 different areas that we focused on. Number 1, your client's goals. What are those goals, and assessing what they are, and so you know which lens you're talking to your client about and how you're going to serve them. And number 2 is what the CRE assets classes are, and those are retail, multifamily, industrial, and office. So they're our big 4. Number 3, we're going to focus on today, which is know your numbers, and then 4 is knowing the market and understanding the market. But back to knowing your numbers, and this is where we spend a lot of our time as commercial real estate brokers, is analyzing the numbers. What is the gross income? What's the actual income versus the scheduled income? What's the market income? That might differ drastically from what the actual income is. If an owner has managed a property themselves and maybe they're 30 or 40% below market because they haven't wanted to have any vacancy, so they've kept it artificially low. Well, that impacts the value, and we're gonna talk about that today. What's the vacancy, the expenses? Are you budgeting for reserves? And then getting to that all-important NOI number, that net operating income number. And then when we divide that NOI number into a cap rate, we get the value. And we're going to talk about how to do that in a simple fashion. I've got a free tool that we're going to go through and show you here shortly. And really, this income analysis is based on some spreadsheets that I have created over years of my commercial appraisal background and brokerage background, and we basically developed it into a simple and easy online portal called IRRCalculator.pro, and we've got several variations of this, and we're going to take you through that here shortly. So there's the links again to the IRR calculator, and then the branded calculator, which is my investment calculator. That's the link below, and really our goal in this graphic here you're going to see is obviously as the cap rate goes down or up, the property value is inversely directed. So if we've got a lower cap rate, we're going to have a property that is going to have a higher value, and you're going to see that impact today. And so we're going to skip over now to the calculator itself, and I'm going to bring up the calculator, and this is a live stream of IRRCalculator.pro, and it's a simple 7-step process here. And so you're going to see that when we come to IRRCalculator.pro, the site, you're going to see that we've got this again, this basic information here that's going to take an investor or a broker through the process of determining what the value is, and then ultimately we're going to get to what the IRR is. And IRR is internal rate of return. And that, by its simplest form, is the rate of return an investor will receive from point zero, buying the property, the cash they put in, enjoying the benefits of that cash flow over multiple years. And in our analysis, and a typical IRR calculator calculates over a 10-year holding period, assuming variances in income and expenses, and then selling or disposing of the asset in year 10 based on that year 11 income or that anticipated income. And that rate of return that we get is really what they receive over the entire holding period if you were to annualize it. And it's a great indicator. Not a lot of brokers use this. Sophisticated investors use this, and we think that this tool is really a great tool for you as a broker to be able to attract new investors, show them the impact on value, and then ultimately what their yield is going to be over that 10-year hold period. So this can really elevate you as a broker to a whole new level. I found this extremely valuable in my own business. It helps me talk at a sophistication level with investors in a smaller and a medium market that really gives me a competitive advantage. So with that, we're going to go ahead and just do an actual IRR calculator here. We're going to do one. We're going to assume that we are buying a multifamily property. So you can see down here that I have I've got basically, again, step one, what investor am I? And I'm buying here. I'm clicking the button buying, and then I can choose a different property type. And we've preloaded different analysis for you here to be able to look at what am I, who am I, and what income and expenses factors exist for different property types. So step one, pretty easy. Am I buying? What type of property am I buying? And then we're going to go ahead and go on to the next step. So step two is, again, the gross income. And so what is the income? And you can look at this in a couple of different ways. What's the current income? I might put it in here and analyze the property based on that. And then we might put it in based on what the future income is going to be. So, and as you see on the right-hand side, you're going to have a calculator session here, and I'm moving that over on the right-hand side. And as we build our income, this entire little tab is just going to start to populate in real time based on our income. So when we're building the IRR or our property profile, and we can do this I literally have done this in 60 seconds, or we could take hours to fill in all the details. We're going to do it today in about 5, 6, 7 minutes, and we're going to provide the details here. So we can basically put in a summary and just put in a total gross monthly amount or an annual amount, or we can go ahead and do it based on some details. So I'm going to pop open the detail tab, and it's going to open a variety of other details for me, and we're going to build a pro forma based on a 10-unit apartment building that we're buying. And these units are 650 feet, and they rent for $900. I'm then going to go ahead and add another unit type here. There's a little bar that we select, and this is a 20 unit, and there are 10 one bedrooms, and there are 10 two bedrooms. And these are the rents. And so you can see, as we put in this information, it is immediately populating the total property income on a monthly basis, the annual gross scheduled income here down below. And so you see that right here, obviously, under annual. And then it's populated the square footage for us. And then we go ahead and put in our vacancy factor. I'm going to put in a 4% vacancy factor. I know a lot of other properties might be 1 or 2%, and depending on your market, you're going to put in your stabilized vacancy rent. And then over here on our calculator session, you see that we've already got basically our property income, our vacancy rent, and then once we get to tab 3 or step 3, we'll populate our expenses in. So we're building this session, and at any time we can save this session, and you'll see this button down here at the bottom right here, save this session and continue later, and you can put your email in and it'll save that session for you, and you can come back to it at any time. Or you could send the session to a client and say, hey, I need your data to build, I need your expense data, or can you look at your income? Does this look correct? And we'll talk about how to kind of take that to the next level at a later time. So anyway, we've built step 2 and we're done. We're going to go on to step 3. And so here's step 3, and we're going to put in our expenses. And if I select the box here to put in provide my expense details, I can put in as many lines as I want and add those in. Or I can go ahead and just choose to just put in a total percentage. And in this case, I'm going to put in just a % of the total income. And so I'm assuming that this property has about 30% expenses. And as I do that, it automatically just populates what my monthly expenses are based on 30%. You can see over here that we've actually got our net operating income already. It's calculated everything for us. Very simple, very easy. Our NOI is 168. And so just like that, we can do it. If I think that's incorrect and I want to put in $5,500, I put in $5,500. Hey, that's 27.5% expense ratio. So I can play around with this and look at what my NOI is here on the calculator session. I can tweak it. I can do whatever I need. If I think that's 32%, then I put in 32%, and now we've got $6,400. So I'm going to go ahead and just leave this at 28% right now to get kind of an odd number and move on. And that's what I'm seeing in my market on average is about 28% expense ratios for newer apartment buildings, and that's how we're going to build this model. So I'm off now to step 4. And again, this is where we create our value. And so you can see here that we've defined what property valuation and a cap rate is. And again, if at any time you can click on one of these blue links here and it'll tell us, hey, I need some help. What is net operating income? So as I clicked on that, the calculator help button pops up. And right here, we can see that, hey, we've got defined what NOI is. And then, you as a broker can, start to educate your clients, help them understand value and how to create value, because that's what you do every single day. So with this particular value, we're going to go ahead and I'm going to populate it with a 6% cap. And as I put in a 6 cap, you're going to see that I've got this, it automatically calculates my value. So based on $163,000 of net income, my value is roughly $2.88 million, $2.9 million for rounding. And I've got this great little bar down here, and so it centers the 6 cap for me in the center of my grid, and I can actually slide my cap rate down to look at sensitivity in real time. So if I want to see what a 7 cap might be, I put in a 7, I can put it here, and immediately my property value is changed instantly. Or if I just want to type in a 6.5 cap, it's going to auto calculate what that value is up here in the property value section, and then center that 6.5 cap for me here, and I can start to move that grid down. What's a 4.5 cap? 3.8. What's a 9 cap? 1.9 million. So again, just a great way to look at sensitivity analysis. I'm going to go back to a 6 cap, and I'm going to keep it there, and then I'm going to go on to step 5. And here is where the power of the IRR starts to take place. We've created steps 1 through 4. We've created the income, the expenses, and the value of the property based on 1 year of income. Now we're going to put in the mortgage details to try to get out what the true cash flow is to the property, and then that will take us into the IRR. I am going to go ahead, and again, we can put in a dollar amount here or a percentage amount for my down payment. I'm going to assume I'm putting 25% down, and I've got an interest rate of 4.5% and an amortization period of 30 years. So instantly, I have created my monthly payment, my annual debt service, and I know what my DCR is for my banker right there, 132. I need about a 120, 125 debt coverage ratio for my bank. I'm going to meet or exceed that based on this pro forma, and I've got this dialed and done. And again, everything is right here summarized on our calculator session, and we're off and rolling. At any time, you can click this button called Clear Session, and it'll actually just erase everything for you. I'm just going to highlight it here. I'm not going to press it. That would delete everything and then take us back to ground zero, and we can start over. So if you screw up, pretty easy to just check that box and move back, start over. So we're off. We've done our banking information, and we are off to now doing the final step for the 10-year cash flow, which will give us our internal rate of return, or our IRR. So all we need is 3 pieces of information to do this. One is we got to grow that income. So we have our income, which those rents on that apartment were $900 a month. And again, I can actually click a button up here. If I were to click back to step 1 or step 2, it'll show me what those rents were. And so I can adjust anything on the fly at any time by just clicking one of those steps. I'm going to go back to step 6, and I know that, hey, I think those rents are going to be able to grow at 4% a year. I think my expenses are going to grow at the same rate, 4%. And then we have what's called a reversionary cap rate, or a cap rate at sale. And most people doing this analysis default to do 50 basis points higher than their cap rate at the sale. So as you remember, in step 4, when we were creating the value, we were at a 6 cap. So it's automatically put our reversion cap rate, or our cap rate at sale, and again, this is 10 years down the line, at a half a point higher, or a 6.5 cap. And we're going to keep that analysis, and we're going to go ahead and view the final analysis. So just like that, we're done. We've actually done a IRR calculation. This is the assumptions tab, which shows us our investment summary, and it's going to give us a summary of the property income. You know, what was the investment? What's the income? Step 2. Step 3 is our expenses. Step 4 right here is our again our property valuation and our cap rate. We've got our debt analysis here. We've got our cash flow assumptions based on the growth of the income. And then as we move forward, we're going to move forward here down to the actual results of the 10-year cash flow analysis. And again, this is really my spreadsheet in a web format, in a very simple to easy to use and look at analysis. And then at the very, very bottom, we've actually got our IRR. So you're going to see right here, and I'm just going to pop an arrow on that right there. That is our IRR, which is 15.92%. And that is based on all of these assumptions, that we have, that we put in over a 10-year time period. So you can see here, year 1, again, was our first year. That's the gross income of those rental units at $900 a month and $1,100 a month. And then we're growing that income every single year, all the way out to year 10, which is, again, right here. Here's year 10, right in this area. And you're going to see that that income is up to $327,000 a year. And then we're going to sell the building, and we're going to get those proceeds of paying off the mortgage and getting all of that money in. And we have made 15.92% or 16% cash on cash, or that is not cash on cash, I'm sorry. That is our internal rate of return over the 10-year period. Every single year's cash flow is calculated right here. So you're going to see on this line right here, you see that my cash on cash return for year 1 is 4.4%. Not great. That's my cash out based on 25% down, enjoying all that NOI, and that's increasing every single year, as you can see here, on and on and on and on, until we get all the way out to year 10. We're making that. With principal reduction, my first year cash on cash return is 9.2%. So obviously it's much higher, but this is a great tab, great summary page to send your clients, send your investors, and do sensitivity analysis on this. And then again, as we look at the entire, we look at the entire IRR, over that 10-year hold period, it's almost 16%, and we're off and rolling. We've got a loan amortization table as well. And so that's here. We can check and look at that loan amortization period and my debt, my interest payments and my cumulative payments, and then obviously what my ending balance is on my loan. So that's helpful too, and a lot of free tools out there. Obviously, if you're using a 12C, which I still use a fair amount, this takes it to a whole new level. And as we click on save the session and we email it out, I click that button, I put in my name and my email here. I can call this my 20-unit apartment unit, Main Street apartment. And then I put in my email address, which I'm putting in here. I agree to the terms, and then voila, in my inbox is going to be a PDF version of exactly that whole entire analysis. And so it's just great. It's a great tool, helps you do everything that you need to do in a simple to easy format. And again, you know, we think it's simple, it's easy. And how I'm using this as a broker is really you know, the key thing here, and we're going to get into that now, is I use this for lead generation. So I send this out to my clients and say, hey, I've got a great new tool that allows you to calculate your income on your existing investments, and let's talk about your value, update the analysis. Let's look at that and let me compare that and look at whether we're at the market, below the market, or what the cap rate is. And it helps you have a discussion on income, expenses, cap rates, yield rates for investors. And as you create these tools or you use these tools with your existing clients, it's a great way to just have a conversation and provide additional value add. Another way to use the tool is to set up your own website, and we will set up great branded websites. And this is an idea. This is a sample of a branded website for a broker in Idaho here. And again, we put in the logo up here, we put in the contact info, and all of those leads of people running investment calculators and sessions will come right to you. Here is one for mine. This is my actual session right here. And again, I've got my logo up here on the top, my contact info here, information about me, and then you can contact me. But people can run this. The entire engine is right here. We can start saying I'm selling a retail property, go to the next step, and voila, I'm running a whole session, and it's your branded IRR calculator. And again, we think it's a great tool, and we're offering this today. It's $99 a year, $9.95 a month if you want to pay month, but really $100 a year. And that does not include the domain name, but if people buy today, we'll actually throw in the domain for free, and that's usually another $9 or $10 depending on which registry that you're at. But you can brand anything you want: Main Street USA, investmentcalculator.com, you name it, you dream it up. We'll need those three pieces of information: your logo, your contact info, obviously your name, and we can have that thing up and running for you in 24 hours. And so it's just a great way to be able to add value to your clients, calculate, show a sophistication level that you probably have, or maybe you're just learning as a new broker, and you can provide that service to new prospective clients or existing clients, and start having those conversations. So again, thanks for joining our webinar. Really appreciate it. If you need any information on this, you can go to reallaunch.com. We also have a great education site called mynoi.com, where we have a lot of content there, and we can send you a full copy of this presentation. It'll be live and available here within 24 hours. So thanks for joining us. If you have any questions, send us an email to info@mynoi.com, and thank you for joining us. Take care. Go do a few deals out there today, and we'll talk to you soon.